School. We're here with a special Digital Underground edition of YouTube Live, where we have two special guests. One is Mark Moss, in which many of you guys are familiar with. He is our lead, investment analyst or just financial guru, one of them when it comes to the crypto space. We also have Trevor from a company called PolyMath that has interested us very deeply, and we want to get all into that here very shortly. So I'll let Trevor explain what he does, because I'm the newbie to the crypto space, but it has something to do with securitizing tokens and assets across multiple verticals. Trevor, and that type of thing. But stand up and tell us, what it is that you do.
Well, first of all, I am a proud Canadian. I'm calling from Toronto, which is actually a hub, maybe the hub in crypto. And the reason is a little project called Ethereum was founded out of here. So just outside my office windows, downtown Toronto. And it's really interesting because there's this Silicon Valley effect going on where all this wealth has been created through the emergence of Ethereum. They actually say Ethereum itself made more millionaires than any other company ever. We're talking like thousands and 10,000 millionaires. So whatever, it's just money. But what's cool is that it's getting recycled back into the community, and a lot of the early adopters are kind of reinvesting it into other projects. People like me who kind of put it all back into other exciting projects. I'm actually wearing a T-shirt of Cosmos. This is not my project. I'm not even an investor in Cosmos, but or a purchaser of their token. But it's a Toronto company. Something I'm really just proud and supportive of all the local projects that come out from here. And you guys have to come by and check out the scene one of these days.
Most definitely. And Toronto is one of my favorite cities. I hear the Toronto or the Canadian accents coming out of your voice. Or out of your mouth. Yeah.
I got my hockey stick out in the other room.
Yeah, no, you have a background in hockey too. You're drafted by the NHL. Is that correct?
That is correct. We actually deport people that don't know how to ice skate, so they.
Yeah, well, me and my community, the Black community. I don't know if we could live in Canada, because I don't think many of us actually know how to skate. But that's okay. We can still invest and learn in terms of what it is that you're doing regarding PolyMath. So what problem is PolyMath solving in the blockchain space?
Yeah, there's a lot of different angles. It kind of depends who's asking me, but a really simple analogy is that what Ethereum, I say that a lot. I'm very passionate and bullish on Ethereum and the amazing community around it. But what Ethereum did for ICOs, initial coin offerings, for projects that create new protocols that are on top of a blockchain. What Ethereum did for those, PolyMath is doing for STOs, that's security token offerings. So this is a brand new asset class that is very early. People say, "Oh, I missed out on crypto." Well, you didn't. A and B, there's new industries and sub verticals emerging within crypto, and security tokens are one of them. In our opinion, that's the biggest mega trend by far in the landscape today, is real tangible financial products like stocks, bonds, real estate are migrating to the blockchain, and they're doing it via tokenization, where instead of a share, instead of an LP share, instead of a unit, it's a token. And it's that simple. Instead of a legacy form of ownership, you have a decentralized form of ownership that lives on top of a smart contract and comes with a lot of different benefits. And that's what PolyMath is all about, is enabling this megatrend that we see coming.
Can you simplify that for me? Like, why is that even important? Why is it important for these assets like real estate and others to even, get on the blockchain?
Yeah, the boring answer, I think, is it's just more efficient. You can eliminate your back office. You can do automated dividends and proxy voting and cap tables and corporate governance, like all that stuff. You can literally automate, save money, be more efficient. Another boring answer, slightly less boring answer, is money. You launch a token, you can trade it for crypto, and that's $500 billion worth of capital, frothy capital, I might add, that you can tap into with a token instead of a traditional equity share. So,
well, I think I would jump in and say that it's that question is like in 2001 when someone said, "Why would you ever want to buy clothes online?"
Yeah.
And so what the blockchain technology is uniquely doing is creating a tokenized economy, right? So I believe that all assets will be tokenized, and so this is just one more way. I mean, tokenizing securities has so many advantages. Ownership and custodianship, for one, right, is being a big piece of that.
Yeah, no, absolutely. The transparency and immutability of the blockchain for things like land titles and other forms of more abstract assets can now be imputed on the blockchain. So I totally agree with that.
So let's talk about intangible.
The easy answer is, yeah, it's a frothy market and there's trillions of dollars. It's an easy way to raise money. But the reality is, especially for the blockchain nerds out there, there's a lot. It's just a far superior way to have ownership of that asset. Like,
let me defend that statement, because I know what you're saying and I agree with you. But if you look at a couple examples, Ethereum itself. Ethereum, if you remember in the early days, it was never raise money in a new way. That wasn't the pitch.
Right.
And that's not the future use case of Ethereum. It's got a lot more ambitious plans than just a crowdfunding app. But that's what it is. Ethereum is used primarily to raise capital. And what's interesting to me is that is a rite of passage for mass adoption of something bigger. If you look at the internet itself, in the tech bubble, you had all these people raising money in the public markets because capital was cheap. But that's why the internet is where it is today, because you had all the smart people and the competent people rush to the internet gold rush. And then as all the crap kind of fell aside during the bust, the Googles and the Apples and the Amazons emerged out of the wreckage. So I think this is an important kind of stepping stone, this kind of frothiness and bubbliness. I think it's part of the process.
Yeah, for sure.
So if that's a stepping stone, where is it stepping to?
Yeah, I think it's through Web 3.0. We're stepping to a new, I don't want to sound too hippy-dippy, but we're really entering a new paradigm. We're entering an era where everything is different. Everything that used to be controlled and owned and deployed centrally is now getting done in a completely new way. And I think the implications are massive. They're limitless. Now you have dramatic efficiencies. You have accessibility go through the roof for things like financial products, for things like healthcare and education. I think this transformation that we're working on right now is once in a generation thing.
Yeah, so you talked about this concept of intangible assets, right? So you were talking about a land deed, for example, as it being, it's not really real, things like land deeds, but it's something that's agreed upon by everyone that, this person owns this set of land. And you are in the process of tokenizing it. So can you talk about just some of the things that are intangible assets that can be tokenized? And also, after that, can you talk about, I guess, PolyMath's process of, moving it from traditional, where it is now in terms of how things are handled to this new economy?
Yeah, I think it's a process. It's a sequence. We see the future, but there's a long way between now and then. So we're trying to apply good business practices. I come from the Silicon Valley world of startups where you have kind of product market fit. That's what you're looking for. And you have kind of lean methodology to scale your business. And for us, even though we're a very community-driven organization and we have a lot of volunteers globally working on our product, we still need to have kind of like a deliberate vision. And that's what my job is, to go and kind of paint the future. And for us, that means, a good analogy I like to use is Bitcoin itself. When you have a payment transaction, in the olden days, it would start out on person A, and then there'd be 7 or 8 middlemen, and it would go to person B. So you would have settlement banks, clearing houses, merchant accounts, credit card companies, checking accounts, and all these rent seekers in the middle would take fees. And that's why when you look out the window, all the biggest buildings and the highest paid people are financial people, because they all are rent seekers and they all take dust on every transaction. And what the Bitcoin blockchain did is it streamlined that whole process, and it said, we don't need all the redundancy in the middle. We can just go peer to peer, and our global supercomputer, we call the blockchain, can do all the processing automatically in the middle for a fraction of the cost. We think the exact same dynamic is playing out in the capital markets. We see the same inefficiency, the same rent seekers in between a company and capital, and we want to streamline that whole process.
Yeah, that's great. I think I hear what you're saying, Trevor, on the next mega trend, right? I think my thesis has kind of arrived at the same point, which is the first boom has been fueled by the individuals, and the second boom is probably coming from the institutions, which really require that security to really jump in heavy. And so, right, the SEC fired their shots last July when they kind of put everybody on notice that these coins and whatnot may be securities. I think it also shifted the whole industry, where then everybody started to position themselves as a utility token and not a security, right? But as an institutional investor, I think they're going to want a security and not just a plain utility token. And is that kind of what you're seeing?
Yeah, no, that's bang on. We see, like all of us, the guys that were early, guys and girls, but mostly guys that were early to the crypto scene. We love this stuff. We love it's risky, it's abstract, it's hard to value. We're okay with that. The millennials were tolerant of that. The real money, the real capital is not. They like to value things. They like metrics. They like doing discounted cash flows and other valuation calculations. And they're not ready, I think, even now, 10 years after the Satoshi white paper, they're not ready to invest in an abstract protocol that doesn't really represent ownership of anything. Their LPs and their capital sources are not comfortable with that either. Like retirees and pensioners do not want to play in that game. So we think, but they love crypto and they're very curious, and we get bombarded every day with questions. We're always out at events educating people, and there's this kind of insatiable demand for crypto, but they don't know where to direct it yet. And we think the catalyst for the next major growth in crypto is going to be asset-backed tokens that people can wrap their head around. Oh, this represents a share in a real estate investment trust. Oh, this represents an LP unit in a venture fund. Oh, we can value that. We can use our methodologies on it. And we think that's going to be the catalyst that really brings the real, we're talking, trillions of dollars of capital is at stake here. So that's why we're on the same page as you.
So you guys want to be that catalyst. You guys want to be, the big money is coming. It's coming. You are offering them the product that they need, or the, I guess, utility, or not utility, but the product that they need to actually get into the crypto game and be secure about it for their investors. Is that a correct statement, or am I missing something?
You're just completely off in every. No, just kidding. Yeah, no, dude, you nailed it. I like to use I'm a chart guy. I love looking at charts and data. And if you look at the market cap of utility coins, and this is not just the price, I'm just talking about like the adoption of utility coins. It's a hockey stick, and it's Bitcoin launching, and then some other ones, and then Ethereum. And then Ethereum was the catalyst that launched the hockey stick. Sorry, I say hockey. And
you're Canadian.
Yeah, and we see. I'll try to use like football or something to help you guys really visualize. Americans make fun of Canadians a lot, so every once in a while.
Yeah, no, football is America's.
We have to fight back.
Yeah.
I was just saying, so there's this massive growth spike because of an inflection point, which was Ethereum, and we see the same dynamic playing out in securities tokens. You have some linear growth right now. There's a few that have managed to launch, but we're trying to like smash the barriers to launch it. And PolyMath is going to be the catalyst that launches the hockey stick for securities tokens.
Yeah, Trevor, like I said, I agree with you on that. I've come to the same thesis, and so I see what you're saying. And so, as I understand it, PolyMath has created this STO, right? It's kind of like a protocol for a security. But I kind of look at it like, like Ethereum is a protocol, which, dApps can be built on. What, has the smart contract technology, and it's a protocol. It's like a product, whereas you kind of like have like a product and a service, right? So like you kind of have like legal teams and development teams. So there's like, I see you integrate with Civic for like identity verification. So is it a service and a product, or one or the other?
Yeah, that's a good question. I think there's ICOs and then there's STOs. STOs are harder. There's more steps involved. There's more service providers necessary. It's kind of like if you do an IPO, it's not just one group that helps you. You have legal firms, you have investment banks, you have whatever. So right. Auditors, whatever. So for us, we're streamlining that process, but there's still a lot of steps involved, and you need KYC providers, you need exchanges, you need marketing help, you need legal advice. So we know what we are and we know what we're not, and we're not a law firm. We don't give legal advice. We are not at our core protocol an advisory. We don't advise you on your token sale. All that PolyMath does at its core is it powers the tech that your token lives on top of, just like Ethereum powers the tech of ICOs. So we've made it so every token that lives on the PolyMath protocol is smart, and it is compliant, and it is KYC and AML aware, because we have whitelisting technology that authorizes accredited investors and blocks non-accredited investors. And it's all done through the issuer's portal. So we've kind of built this base layer that serves as a foundation to the ecosystem, and other services like advisories and law firms can work inside and build on top of that foundation.
So is it kind of like if I have a security token that's been approved or whatever, it's gone through all the necessary steps, I could bring it to PolyMath, get like some sort of a certification, and have a smart token built that can then give me all those benefits of AML and KYC and all of that?
Yeah, but in reverse. You can actually go to polymath.network/wizard, and you can create, this is a demo that we're releasing, it's the alpha, we're releasing the beta, and you can launch a security token in minutes. That doesn't mean it's compliant yet. You still have to go and get legal advice, but the tech that powers your security offering can be done in minutes. And that's compared to weeks and months and tens, if not hundreds of thousands of dollars. We know it ourselves because we waited and paid that amount. We're trying to like really dramatically lower the price and the time it takes to do that.
So can non-accredited investors do anything with PolyMath, or is it only for accredited investors at this moment in time?
Yeah, great question. We luckily do have resources for non-accredited people. It would kind of be a crime if we didn't, because the whole point of crypto is like it's accessibility, it's community, and like why if we only let rich people. Part of that's out of our control because we are under the purview of certain regulatory bodies that do a good job. But to answer your question, we support little-known exemptions in legislative acts like the Securities and Exchange Act of 1933, and the exemptions since then, and the updates since then, that do allow for, in some cases, non-accredited people to invest in securities. So securities laws have modernized over time. I'm not a securities lawyer, but the good news is that issuers do have the option, as far as I know, to create security tokens that do allow a limited number of non-accredited investors to invest.
Do you see any convergence of what you're doing in, let's say, crowdfunding or anything like that?
Yeah, it's we just learned up here in Canada, there is a new designated type of investor. There's accredited, non-accredited, and now they have eligible investors. I just learned this today. And that means it's designed for crowdfunding. So now it's a middle ground between the two extremes. And we think those things are fantastic. And we see the trend becoming more and more inclusive. And we're trying to be at the front of that trend.
Hey, Trevor. So regarding the PolyMath token, I mean, right now it's built on Ethereum, right? And you guys said that possibly there's a chance you might switch to another platform at some point. Is that correct? So you built a protocol on top of a protocol?
Yeah, we don't comment too much on the details of proprietary blockchains right now. But what we do say is that our decision to launch on top of Ethereum was a strategic one, and it was guided by the community. And as I said, we're very bullish on Ethereum. We think they will eventually solve any so-called scaling issues that are present. And more importantly, and I said this since the beginning, we want to be the project that brings real traction to the community, that brings real users from the real world to the blockchain. And right now, even 10 years since, we're not that young anymore. We've been around as a community for a while. It's time to start having fruit of real users in the real world benefiting from the blockchain. And I didn't want to be the one, fighting over block size debates and scaling debates. Like, there's lots of really smart people doing that kind of stuff now. I wanted to be the guy that brings real world traction to the blockchain. So what we decided to do was to take Ethereum, which is turnkey, which has a virtual machine built out already and tested. It already has a scripting language baked in. It has a mining network fully fleshed out. And we decided to take that and modify it and extend it to make it more friendly for securities. And that was, I think, a smart decision looking back.
Yeah, I'm a big bull on Ethereum. I bought in super early, and it's my largest holding. And I agree. Anybody that thinks they're sitting back with their arms folded and not working on the scaling issue is missing a big piece of that. So
see, I see, because I was there since day one and was one of the first people to read the white paper, and I invested in the crowd sale at 30 cents. You got one Bitcoin got you 2,000 Ether at the beginning, and for me, it's been hard to hear a lot of the haters, because Ethereum's so far ahead. They have literally 30 times more developers than volunteering to the protocol than the next biggest crypto project. They've got billionaires, literally people who have become billionaires that have their wealth in Ether, and all these stakeholders that are incentivized to make sure that Ethereum wins. I love these other projects. I love competition. I'm also a big fan of EOS and Hashgraph and some of these other exciting chains that come up. But Ethereum to me has just such a big network effect and such a huge lead, and has all these wallets and all these exchanges already backwards compatible with it. It's going to be hard to overtake it.
Yeah, I mean, they got the first mover advantage. I mean, you can never deny that right off the bat. And I'm a fan of Dan Larimer's previous projects, but EOS doesn't even have a beta out. So anyway, we won't get into that conversation. But one thing I was curious about is the PolyMath token itself. So I don't really understand the token mechanics. So is it a staking coin? What kind of consensus do you have, and so forth?
So the utility of Poly is access to the platform, and it's also a KYC incentive mechanism to make sure that our KYC providers are incentivized to KYC investors in a decentralized way. So that's one of our big innovations, is we try to make it so all of these stakeholders involved in an STO are all aligned to take action to help the issuer raise money. And we've designed, and you can get more details on that, and I could share it with the community on exactly how we've architected our token mechanics and token economics.
Okay, because I didn't see a lot of that. So you're saying that, I understand it's a utility in a sense where I have to have the token in order to go through the process, but you're saying that by staking the token, I help that process for other people?
Well, so Ethereum is not proof of stake yet, right. And there's no staking going on. But I think I know what you're asking. And look, any ERC20 token, uses gas, uses Ether, and uses the mining network of Ethereum. What we're trying to do at PolyMath is create a new currency for the security token landscape. And we want it to be just as fungible and as liquid as Ether is for the ICO community. And the fact that we piggybacked off some of the innovations from Vitalik and the Ethereum community, I think is a strategic decision that we made to get to market faster.
Okay, got it. Yeah, like I said, I love Ethereum. It's my largest holding. I've been there since $5, and I love it. So it's a good platform. So I got you on that.
Yeah, our biggest thing is if this is our reason that we hope people purchase Poly, because we want them to use it. And we right now have, by pretty much any metric, the biggest security token platform by far, in terms of signups, in terms of capital, in terms of traffic. So what we're trying to do is build the biggest marketplace of issuers and investors and build the first network effect that the security token world has ever seen. And once we do that and we say, Poly, whether you're a KYC provider, a legal delegate, an investor, an issuer, a developer, that is the way you access that ecosystem. We think there's a lot of value to be had.
So who are you cutting out, right? So we talk about the inefficiencies of traditional markets and how you have all these rent, specifically